Welcome back to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm pleased to have with me once again James Turk. It seems as though when James returns to his native America from his home in England, he is available, sometimes at least, to share his thoughts with the listeners to this show. So I'm really pleased to have my fellow American and fellow Buckeye back here with me today. I'm guessing that most of you know James Turk. But for the benefit of those who may not be familiar with him, he is the founder and lead director of Gold Money, which provides a convenient way to buy and sell gold online using the digital gold currency for which James was awarded 4 U.S. patents. James is a free market Austrian school advocate. As such, he understands as well as anyone why honest money in the form of gold and or silver is essential, not only for economic prosperity, but for our freedoms and individual liberties as well. And I would suggest you not only check out goldmoney.com, which you can easily do, but go to another site there at Gold Money. In fact, I think it's called Gold Money Insights as one of the tabs at Gold Money, to read the blogs, read the ideas that James Turk provides, as well as Alistair MacLeod and other commentators. Alistair, of course, is a regular guest on this show, a highly valued guest, and but I know you'll would really benefit a lot from James's insights and other writers there as well. So, James, thank you so much for joining me again.
Jay, it's always great to be with you.
It's always good to have you. The rare occasion when we get a chance to talk to you, you're in New England, at your home in New Hampshire. I wished you'd stay on this side of the pond more often, but I guess you have your reasons for being over there. I want to follow up with an article that I think you said Alistair actually wrote called Myths About Gold as an Investment Medium, but I know you can comment on those things as well. But I'd like to, before we get into that, I'd like to ask you just a couple of basic questions about gold money. It's my understanding, James, and correct me if I'm wrong, but if I have a gold money holding, you call them holdings, if I have a gold money holding, I can pay for commercial transactions or transactions with other individuals using gold. We can trade in gold, as long as the other person, the other party, has a holding as well. But I can't use that holding, can I, to transact business otherwise? Or am I wrong about that?
No, that's right. You can transact with other Gold Money customers, and the reason why that's the case is these days with various know your customer rules and anti-money laundering rules, we have to know that we're familiar with both sides of the transaction. We know the people on both sides of the transaction.
Mm-hmm. So, for example, if I wanted to, for subscriptions to my newsletter, and if I have my subscribers that are have holdings in Gold Money, I could do that transaction. I could grant them a subscription in exchange for X grams of gold.
Yeah, that's exactly right. Whatever the U.S. dollar amount is that you charge, and the moment that they transfer gold to you, it would be done at the exact market equivalent exchange rate between gold and U.S. dollars.
So I know that your ultimate goal, I believe, is that you would like to see gold reinserted as money, that we had at least an option to use gold as money if we chose. And, of course, in this way, we can do it with Gold Money holders. And I know that Gold Money made efforts to expand that in other directions. For example, I had the prepaid Gold Money MasterCard. And it worked like a charm, frankly. I could go online, I could buy my gold, put it in a holding or in an account, and then if I needed to load my MasterCard with dollars, because that's what I have to have living in New York, I could sell the gold as much as I wanted and just transfer the dollar value into the MasterCard. But then all of a sudden, it wasn't allowed anymore. I guess the European Union put a stop to it, James?
Yeah, that's exactly right. The bank that was providing it was based in the European Union, and it was the European Union put in a rule that the bank could only provide it to people who lived in the European Union. So it's available now in Europe in euros and British pounds, as long as Britain stays in the EU, but it's not available in U.S. dollars.
You think they will? You think Britain will stay in the EU?
No, I think Britain's going to leave the European Union on October 31st. There's too much at stake for Boris Johnson and the Conservative Party in the UK to not follow up on that commitment.
How do you feel about it?
I think Britain will do quite well as a sovereign, independent nation without taking rules from the bureaucrats in Brussels. The whole campaign was based on bring back control. Bring back control to the EU, UK Parliament, UK courts, and make them UK free to do trade deals around the world, including other Commonwealth countries. They were at a disadvantage in being in the EU. So I think they're going to do quite well outside of the EU. There might be a hiccup for a couple of days or a couple of months, but I don't think it's going to be a big deal. My guess is it's going to be sort of like, you remember Y2K? Everybody said computers were going to collapse. Yeah, it may be a little bit more difficult than that, but it's not going to be long-lasting impact. And I think Britain will do quite well as an independent sovereign nation, which it has been for hundreds of years in that role.
For sure. Well, getting back to the gold money issue, you're quite a visionary. I mean, as we mentioned, you have 4 patents to use gold as money on the internet. What are your thoughts about? Some people are trying to use cryptocurrencies, attach or somehow connect gold to cryptocurrencies. Do you think something like that is possible? Might it happen anytime soon?
Well, I think we've had these discussions on cryptocurrencies before, and I've been sort of hot and cold on them over the years. I've been following it since the first transaction with 7,000 bitcoins that were used to buy a slice of pizza back in 2008, as I remember it. But yeah, the two are really complementary, Jay, in the sense that the advantages of gold are that you can hold it in your hand. You can't do that with a cryptocurrency. Another advantage of gold is that once it's mined forever. Cryptocurrencies, you're constantly spending large amounts of electricity to keep those things current. What happens if there's a blip in the electric grid and things of that nature?
Yeah.
So those are the disadvantages of cryptocurrencies. The advantage of cryptocurrency is that it can't be confiscated, at least based on today's technology. And as we know from history, gold has been confiscated by governments in the past. So, which is why in Gold Money we give our customers the opportunity to store their gold in several different countries and 13 different vaults around the world in order to get geographic diversification and political diversification. But the bottom line on cryptocurrencies, Jay, is that I'm actually, encouraged that what they're doing, they're educating people. Remember, cryptocurrencies are called cryptocurrencies. They're not called crypto money. Money is a tangible asset, like gold or silver. And we have to distinguish between money on the one hand and currencies on the other. And what cryptocurrencies are doing are educating people to come to the conclusion that there's a better form of currency out there, which is digital gold currency, and the best form of money is actually gold.
All right, those some very good insights there, of course, and thank you for sharing those. Now I'd like to go on to this notion of the notion that people just don't really understand what money is, and the myths that Alistair wrote about, and maybe you can comment on some of these. I'll just name, we'll do as many as we have time here. I think we might have time to cover all 7 of them or 8 of them. One is that gold... Let's start with the first one about whether gold is money or not. Yeah, gold is money. Gold is no longer money, they're telling us, when we take our Economics 101 courses. What about that? It's still money, Jay. It's still money. It just may not circulate that much in currency anymore. It's money because it's useful in economic calculation. An ounce of gold today buys the same amount of crude oil it did 70 years ago. An ounce of gold today buys a man's suit. An ounce of gold in ancient Roman times bought a Roman senator, his toga. So, you can measure the price of goods and services in terms of gold, and that's one of the reasons why it's money. The other reason why it's money is it's money you own. All of the other things today that are circulating that purport to be money are based on someone or something. Cryptocurrencies are based on a mathematical formula. Fiat currencies are based on some bank's promise. But gold is based on the fact that it's a tangible asset and has served as the role of money for 5,000 years. So gold is money, which actually brings up an important point, Jay, because a lot of people think gold's an investment because the price can go up or down. What's happening is that it's not an investment. It's a sterile asset. It can't generate any cash flow. When the price of gold goes up or down, it's relative to the purchasing power of the currency in which you're pricing that gold. So the fact that you can still buy the same amount of crude oil today that you did 70 years ago shows that it's not an investment.
gold didn't increase your wealth. It preserved purchasing power, which again is another key function of money.
So we would do well then in our own minds, if the government doesn't go along with it, to really sort of measure things in terms of grams of gold or ounces of gold, I guess, is what you're telling me.
Yeah, that's exactly right. When you look at a portfolio, you talk about owning stocks and cash.
Uh-huh.
Well, mining companies would go in the stock investment part of the portfolio.
Sure.
But gold goes in the cash component, your liquidity, what you need for your everyday liquidity purposes. So you compare gold to the other alternatives for liquidity in the world, the U.S. dollar, the Swiss franc, British pound, and cryptocurrencies, and you'll see that gold has done very, very well compared to other currencies.
Well, it certainly has, even against the dollar, though we've had, of course, from 2011 until about 2015, it wasn't a very happy ride for us, but would have been a good time to be accumulating gold, I suppose. I know it was. Okay, well, let's go on to the next myth. Gold doesn't pay interest. Oh, this is one I've had thrown at me when I was on television one time. Gold doesn't pay interest. Well, in fact, I know that there are ways that you can turn your gold into interest if you so choose to do that. But comment on that one if you would, James.
Yeah, what does pay interest these days, actually?
Yeah, that's exactly London,
right. in Europe, you've got negative interest.
Right.
This is another myth, because what interest means is if you're lending your dollars or if you're depositing your dollars in a bank, you're earning interest because you're taking risk. You're taking the risk that whoever's borrowing those dollars or whichever bank you have those dollars deposited are going to return those dollars to you in the future when you want them. You can do the same thing with gold. You can lend it and you can earn interest. But if you don't, you just have a tangible asset. And I go back to the first point, which is that it's money you own.
Mm-hmm. Whereas we know that the value of even almighty dollar evaporates over time in its purchasing power in a bigger way than the government measures, I think, but that's another story. Myth number 3, gold is expensive to store and insure. How much do you have to pay to store gold at Gold Money, for example?
Well, it's 12 basis points per annum, which is actually less than most people pay for checking account fees.
Uh-huh. Okay, so gold is expensive to store, and that's not all that expensive, is what you're telling me. At least at Gold Money, it might be more expensive than some other places. It's
not that expensive to store in Gold Money. And the other thing in Gold Money is that you get insurance and you get auditing. There are economies of scale that can come from storage that are important to people who own gold, because the basic thing you want to know is that your gold is safe. And the alternative is if you don't have it stored professionally, you store it yourself. And when you store it yourself, insurance can be expensive, or you run the risk of it being stolen.
Yeah, and I should mention that gold, when you put your money at Gold Money, it's allocated. It's allocated gold, right?
That's right. The basic premise on which Gold Money is built, Jay, is that for every fraction of an ounce of gold, for every gram of gold that a customer owns, there's a weight of gold in the vault where the customer expects that gold to be stored. That's the basic premise of Gold Money, and that's the key thing that's verified by independent third-party auditing.
Okay, myth number 4, gold has no intrinsic value. Well, I think you've already addressed that, perhaps, but maybe another comment or two.
Yeah, value is in the eye of the beholder. One man's treasure is another man's junk. Some people may not see gold as being useful, but to me, gold is very, very useful, and I think the proof of that is the fact that gold is trading at around $1,500 an ounce. If it wasn't useful, it wouldn't have value, and if it didn't have value, it wouldn't have a price, because nobody would exchange it for fiat currency. So I think we can just do away with that myth as well.
Yeah, I mean, maybe they would like it not to have any value. I think somebody during the Johnson administration suggested that gold shouldn't be any more expensive than copper or something like that. But I would suspect that if gold was that cheap, it would find its way into various industrial uses as well. But anyway, people really store gold as money, as you say, whether they think about it or not. Myth number 5, gold has no real use beyond looking pretty. Well, it has value of money, we know that. But it does have some industrial values as well, I think.
But the industrial value is inconsequential. And that's one of the differences between gold and silver. Silver has a potentially big industrial use, so you have two different demands for silver that can impact its price. But gold, basically, it's stored because it's a monetary asset. It's accumulated above ground, which sort of brings out another point that's important to consider, that, why is all of this gold stored, once it's mined? And why does it continue to have value? It has value because of its usefulness in economic calculation, being money you own, and all the other things we have. So, gold very much is still money.
James, you mentioned a little earlier that we've had a history in the United States and other countries as well of having gold confiscated. That might still be a concern, I would imagine, given the chaos that's heading our way. But what about silver as an industrial metal? Might there be some safety in diversifying and owning silver and not just gold? And silver, a lot of people point out, historically is way cheaper than it has historically been relative to gold. So do you see silver, are you a bit more bullish on silver than gold at this time?
Yeah, I am, Jay. And, I think silver is probably the cheapest asset on the planet at the moment. It's so undervalued. But, as is so important in everything when it comes to money and investing, timing is all important. The important thing is that I think we're starting to see a nice, we're at the beginning of an uptrend in the silver price, and I think that uptrend will continue. The other thing that's significant is the ratio between gold and silver. If you divide the price of the two, it takes about 86 ounces of silver to equal 1 ounce of gold in terms of dollar value. That's historically very, very high, which means that silver is very cheap relative to gold. So I would expect that ratio to fall. If, for example, in 2011, that ratio was 30 ounces of silver to 1 ounce of gold. So as the precious metals move higher from here, in dollar terms, silver is likely to outperform. But there's a risk to silver that you don't have with gold. It's that industrial component, which is a big thing of silver. So you get a lot more volatility. And the way I like to describe it, owning gold is like flying in a 747. Owning silver is like flying in an F-15. They're different. And silver's not for everybody, but if you're prepared to take that volatility and the extra risk, it's the cheaper of the assets right at the moment.
Yeah. Well, speaking of volatility, myth number 6, gold is volatile, and certainly we saw today it get hit real hard. I mean, I woke up this morning in Europe and Asia was up, I think, $10 or so. And by the time Mr. Trump did a tweet or talked about relaxing trade tensions with China, the equity market was up 400 points, and gold just got absolutely decimated, slammed. So there is short-term volatility in gold, but I heard you say a little while ago that gold holds its value since the Roman days.
Yep, that's exactly right. Don't be disturbed by the short-term noise, is what I call it. Focus on where the value is, focus on where the safety is, and focus on diversifying your portfolio so that you know that come what may in this uncertain world in which we live, because nobody can predict the future, that you've got all of the possible alternatives of safety covered. And time has shown throughout history that owning some gold in your portfolio, physical gold here I'm talking about, not paper representations of gold, but physical gold. Owning some of that in your portfolio makes good sense.
It certainly does. Well, one final myth here, the myth number 8, I guess, it's gold is a greater fool investment. Well, we've seen plenty of greater fool investments, but I don't know, I can't see that, but what do people argue, that gold is a greater fool investment?
Well, I think the argument is that you're waiting for somebody to come along and buy it at the same price or a higher price at which you bought it. Yeah. But that's not the point. It's not an investment. It's money, and it's money that you own. It's not an investment because it's just a sterile asset that doesn't generate cash flow. If the gold price goes up, it's because the purchasing power of the currency goes down, or a bank failed, or there's a geopolitical event, or any one of the dozens and dozens of things that can cause the price of gold to go up or go down. So again, don't focus on the short-term noise. Focus on your portfolio. Get your portfolio balanced and prepared for an uncertain future. And again, one of the best ways to do that is to own some physical gold. The rule of thumb is to have 5 to 10% of your portfolio in physical gold. If you're a little bit older, you don't want to take as many risks, so therefore you should have a higher percentage of liquidity, which means have a higher percentage of gold in your portfolio. But I'd say at a bare minimum, that 5 to 10% rule of thumb is a good one to follow.
All right, James, with just perhaps a quick comment on the dollar. Well, maybe not. 30 seconds. Does the dollar are the dollar's days numbered as the world's reserve currency?
Yeah, I think there's so many things that are conspiring to remove the dollar from that throne that it's just a matter of time before it falls. It may remain strong for a while longer, but ultimately its purchasing power is going to continue to be eroded by central bank actions.
Well, it certainly has been, ever since 1971 especially. James, thank you so much for your time. Always a pleasure having you with us. And folks, go to goldmoney.com and the Gold Money Insights in particular to read what James has to say, Alistair McLeod and other contributors there. Thanks so much, James, for being with us.